Hello, welcome back to Learn Oikonomia. In this video, we are going to answer the question, how do negative interest rates work? Before going into the depth of the video, let's see, is there something called negative interest rates? If it is there, then how does it work? So these are the topics of discussion in this video. Before understanding negative interest rate, let's see what a normal interest rate is. So when you say interest rate, that means that it is the amount or price charged upon the borrower when he or she borrows money. For instance, if a person is borrowing some $100 or if he or she is taking $100 as loan and he or she is charged 2% as interest rate, that means that if the annual interest rate is 2%, when the person repays the amount after a year, he or she has to give not only $100 but also the 2% of $100, that is $2 after 1 year. So after 1 year, the person would be paying not only $100 but also $100 plus 2% of $100, that is $2. So this is what happens in a normal case. So what does it mean when we have a negative interest rate? Or what can we say when borrowers are credited interest instead of being charged of it? Or in other words, you can see that in case of negative interest rate, 2% interest rate means that the bank would be paying the borrower $2 after after 1 year of using $100 as a loan. So in the case of positive interest rate, the borrower has to pay the bank $2, that because 2% is charged as the interest rate. But in the case of negative interest rate, the bank would be paying the borrower $2, that is 2% of the principal amount. Okay, this is known as a negative interest rate. We can see that negative interest rate is something like counterintuitive, and it appears to be counterintuitive if not downright crazy. So why would a lender be willing to pay someone to borrow money considering the lender is the one taking the risk of loan default? We have to see what is the mechanism of working of negative interest rate. So why does it still be used? Inside out, it might appear that there are times when central banks run out of policy options in order to stimulate the economies of different nations and turn to the desperate measure of negative interest rate. So negative interest rate involves the bank encouraging people to come and borrow money from banks. So negative interest rate, what does it mean by the term in theory as well as in practice? These are not only an unconventional monetary policy tool, but also these kinds of tools like negative interest rates are something which we can consider as a recent origin. Sweden's central bank was the first to deploy them. And you can see that in July 2009, the Riksbank cut its overnight deposit rate to negative 0.25%. Also, we can see that the European Central Bank followed the same thing in June 2014, and it also lowered its deposit rate to minus $0.1%. There have been many other countries which too follow the same track. Some European countries, Japan, have since opted to offer negative interest rate, and this has resulted in $9.5 trillion worth of government debt carrying negative yields in 2017. Let's answer the question, why did they take these kinds of drastic measures? Especially we can see that the monetary policy makers, they are very much afraid, especially when the Europe was at the risk of falling into a deflationary spiral. These people were very much afraid. So in harsh economic times, people as well as businessmen, they tend to hold on their cash while they wait in order to see the economy improving. But this kind of behavior could weaken the economy further. This is because lack of spending would lead to further job loss, lower profit, and as a result of these, prices would drop. All of these would reinforce people's fears. These would lead people to give even more and more incentive to hoard their money. So as spending slows down, price will drop again and again. These all will create another incentive for people to wait until prices to fall further. And this is considered to be a deflationary spiral that European central banks are trying to avoid. And they are trying to avoid this with negative interest rate strategy. And this is not only something which would affect the bank loans but also bank deposits. With negative kind of interest rate, we can see that cash which are deposited at the bank would be yielding a storage charge rather than an opportunity to earn some interest income. So by charging European banks, which would in order to store their reserves at the central bank, policyholders would be hoping to encourage banks to lend more and more in the economy. So in theory, we can see that banks would lend money, to borrowers and earn at least some kind of interest, as opposed to being charged to hold their money at the central bank. So that means that if they are encouraging people to get some in order to if they are encouraging people to take loans from banks, it's a kind of income making for bank, because these would be helping people to make investment. At the same time, this will be helping bank, because it will be giving some kind of income for banks. Additionally, we can see that negative interest rate charged by central bank may carry over to the deposit accounts as well as for loans. So all these means that deposit holders will also be charged for parking their money at the local banks. So also we can see that some borrowers enjoy privilege of earning money by taking out a loan. Again, we can see the negative interest rates are still being used, because this is to lower the value of euro. This is mainly done by European Central Bank. Now, low or negative yields for European debt will deter the foreign investors. As a result of this, this would weaken the demand for euro. So, what would happen if euro is less demanded in the international market? That will definitely reduce the value of euro in the international market. While this decreases the supply of financial capital, Europe's problem is not one of supply, but this is something with respect to demand. The lack of effective demand would come to play here. A weak euro should stimulate demand for exports and hopefully encourages business to expand. Because when the value of the domestic currency is losing in the international market, if you are going for more and more imports, that will definitely lead the country in question to a uh, very much bad situation. So this if a particular country sees that it's the value of its currency is losing in the international market, then it would try to promote its exports. So when it tries to expand its export, it has to increase its production. So having said all these kinds of things, let's see the risks of negative interest rates. You can see that many banks in many different countries are promoting negative interest rate. But is there any kind of risk involved in negative interest rate? If any are there, what are these? We can see that in theory, negative interest rates should help to stimulate economic activity, and this is something which helps to deal with inflation. But policymakers remain very much cautious, because they know that there are several ways that such a policy, if they take, can backfire anytime. Because banks have certain assets, and they have mortgages that are contractually tied to prevailing interest rate, and such negative rates can definitely skew profit margins, and this is mainly to the point where banks are actually willing to lend less. So these are actually some kind of risk involved when we have to deal with negative interest rates. There is nothing to stop deposit holders from withdrawing their money and stuffing the physical cash in mattress. We can see that while the initial threat would be a run on banks, the drain of cash from banking system can lead to a rise in the interest rate, and the exact opposite of what negative interest rates are supposed to achieve. So this can backfire. This is why banks would fear that negative interest rates can backfire. So that's all about negative interest rate. Please like, share, and subscribe to this channel for more videos. You can be a part of my Telegram channel and Telegram group to discuss your doubts. I'll be providing the links of these in the description box. Thank you for watching. You can join from there.